What's going on, everybody? Welcome to another edition of Weeds Weekly, where I, Kevin Weedmark, walk you through what happened this past week and what we can expect this week as it pertains to interest rates and real estate and all things in our space. We're also going to talk about incentives work. Went to a networking event yesterday and it reminded me of that. And the last thing, it's in the details, right? We're always endlessly trying to help and assist in moving homes. So we're going to touch on that as well. So let's just go back to what happened last week. And look, it's about time, but center stage right now is the presidential election. It's the biggest thing that's kind of hanging over everyone's head. And the big glaring thing that traders are looking at, remember that they're always forward thinking, and why we're seeing interest rates spike is because neither candidate is talking about the federal deficit. Look, the federal deficit is nearing about 35 trillion. It may even be past it at this point. I don't look at it on the daily, of course. However, traders right now are fearing inflation. They're fearing long-term inflation, not short-term, long-term. And what's happening is the 10-year Treasury is getting sold off, which is the direct correspondent towards interest rates. So that's why we're seeing rates spike. And until the federal debt gets addressed, right? Because look, make no mistake about it, the federal government creates inflation by pumping dollars into the economy. They're creating more cash for potential buyers to buy goods. And now you have more dollars chasing fewer goods with whether it's, writing debt off for student loans, whatever the case may be, or just flooding money into the system, giving away handouts. It creates more money supply in the economy, which therefore increases inflation. The government causes it. It's a direct correlation. And now that it's actually spiked all the way up to 35 trillion, what do they got to do to pay this debt, right? Because we have to pay our creditors, China, Japan. We have to now print more currency, devaluing our dollar, and we're just in this vicious cycle right now. So traders are looking at a long term and they're saying, well, shit, that's a real problem. We're going to sell off treasuries. We're going to hedge against that because the 10-year Treasury does not hedge against inflation, where you could actually put it into a stock that has great earnings, whatever the case may be there, and it's a better hedge against inflation. So that's why you're seeing that, and that's why it's creating a big problem. And traders just do not like inflation. So while the labor market has been the biggest focus, now that everyone has taken a step back, and we had this kind of last week to just digest, right? There was no significant economic data. That's exactly where traders' eyes went to, where their focus went to, and that's why we're seeing the 10-year Treasury all the way up to almost 4.3% right now, getting extremely close to some of the highs that we saw last year, right around this time frame, right? The highest rates that we saw last year were October of 2023. Here we are in October 2024, and we're seeing some of the highest rates that we have also seen. So that's the big underlying problem that's sitting out there right now. The other thing is, it looks like the Fed is full steam ahead. It looks like they are very certain. There's a 94.9% chance, traders believe, that coming month, November 7th, that the Fed's going to decrease the Fed funds rate once again a quarter point, and they're going to do it again in December. And while I've shouted from the fences, I think they need to pause, it looks like they are going to be full steam ahead, which is also potentially inflationary. So that is the biggest concern, and that's why interest rates are up, and that was the talk of the town last week. So let's look at what we have this week, and this week we are stacked, and it's really very heavy on the labor market. So now that the number one concern from a trader's perspective, and from as far as what I can see, traders are now focusing on inflation. Make no mistake about it, and I hate to say it out loud, we need a struggling labor market. We do not need a healthy labor market. Is that great for the U.S. economy? 100% it is. But we in real estate, if we want interest rates to come down in the short term, we need some numbers that are not favorable to the labor market. We need a struggling workforce. So honestly, it's one of those, you head into this week, you do not want to see the U.S. economy, kind of fall flat, maybe move into a recession, talk a recession. Obviously, things like that can also put potential buyers and sellers into quicksand. But at the end of the day, we need these interest rates to come down. It is proven that should interest rates come down, we have enough pent-up demand due to the low interest rates and the lock-in effect from the pandemic, that we will be increased activity and we will get more sales if we just get lower interest rates. I truly believe that, and that is something that we are looking at this week. So this week, once again, it is stacked with data. We also have PCE coming out, so we have inflation data coming out. There is so much data that is coming out this week. Absolutely expect volatility. So if you have a customer that needs to lock this week in order to close next week, they absolutely 100% need to be on speed dial if they haven't locked in already with their lender for any potential dips that they see. They need to jump on them right away. Do not worry about lower rates later in the week. Lower rates will come in the months ahead into next year, and you're going to get that ability to refinance. I would be making that call to my clients if I were you. So a lot of the things. So I go to a networking event yesterday, and it's at a new construction development. And the biggest thing that was glaring to me, it was great to meet a lot of great, fun, new people, learn about what they do, learn about different ideas. But the one thing that really grabbed my attention is the person that was working the new construction homes and is representing the builder at how many incentives builders give today. It is crazy. They are doing anything. They are full steam ahead and trying to unload inventory, incentivize potential buyers to come to these new builds. And I'm talking anything from buying down rates, paying closing costs, doing upgrades. And the biggest thing that was repeated 5 times was their willingness to pay a buyer's agent 3%. And the reason that I bring this up is I myself, as well as agents that I work with as well, they are hearing from sellers due to the NAR settlement that, hey, this is negotiable. I'm able to do whatever I want. And realistically, that's always been the case. But right now it's out there in the media, right? So it's a topic of conversation. And I guess the point I'm trying to make is this. We as professionals, it is our jobs, whether we like it or not, whether how uncomfortable that conversation may be at times, to have these professional conversations with our sellers. Look, we're their biggest advocate. But to sit there and tell them that, oh, no problem, we can do this, we don't need to give that, you have a beautiful home, when your competition right down the street or your potential buyer is in the same actual price point as your client with the existing home, and you're not bringing them up to speed of what's actually available out there for them as an alternative, shame on us. We need to educate them, as uncomfortable as that conversation may be, that all that these builders are doing, these new construction homes are doing to incentivize their client bases is massive. And if we want to move homes and we're selling existing homes, we need to have those difficult conversations, allow our sellers to make the proper decisions for themselves in order to move that house. So that's the biggest thing. We need to be knowledgeable of what's out there, educating our sellers, and then moving forward appropriately with that. And the last thing I wanted to cover is it's in the details. Look, make no mistake about it. It is a very difficult market out there for a lot of us, right? A lot of our clients are in quicksand. I believe the election, we talked about it before. There's a 15% decline in October due to presidential elections in 9 of the last 11. So, hey, history is against us as well. But at the end of the day, our goal and our job is to move inventory, right? When someone is ready to buy or sell a home, that is the best time, period. It doesn't matter all the semantics that are going on around us. So our job is to do the best to our ability to assist them in moving that house. And what do I see? I go to a lot of open houses. Every weekend I'm attending them. If I'm driving around on a Wednesday and I see an open house sign, more often than not, 90% of the time, I'm stopping. I just want to see what's going on. Maybe there's a new design that I haven't seen. Maybe it's an existing house that has great potential that maybe I bumped into another real estate agent that has a client, or maybe I myself want to pick up a flip, but I never hesitate to stop. And I can't tell you how often I am just underwhelmed given the fact that agents are just not doing the best. Their attention to detail is just lacking. And given this environment where it is hyper competitive, higher interest rates, you got the presidential election, you got all this turmoil around you, you need to be doing and putting your best foot forward, not only for yourself, but for your clients, right? That's our job. So I thought it'd be great to just kind of go through a few things that I stress with the client, with the agents that I work with and that I have, right, up in Michigan, on what are our best practices. And number one, it's high quality photos. I can't tell you how many listings I see where you have either a seller wants to take the pictures themselves with a camera, an agent takes the pictures with their camera. Look, we're not professionals. And the thing I say about this, it's always worth the money, okay? So you wanna make sure it's that. And high quality photos, you're better if you have 10 great high quality photos instead of 30 from your camera and you don't know how to take photos. So that's number one. Make sure that you're putting your best foot forward with those high quality photos. The second one is make sure that each photo has a description, right? In today's environment, everything is online. First impressions are everything. Your potential buyer's first impression is online. You're gonna need to give a description of what that picture they're looking at, what is it? Is it the kitchen from the north? Is it a kitchen from the living room? Is it a kitchen from the back den? Whatever the case may be, you need to properly walk your client through that house, your potential buyer through that house with proper descriptions of pictures. To me, it's an extra detail. It's a little bit more time consuming, but again, we get paid really good, really well, I should say, for what it is we do. Take the time. Don't be lazy, write those proper descriptions. The other thing is professional communication. I cannot tell you how many times, especially during the pandemic, I would pick up the phone to try and talk to somebody about buying a flipped house for no one to return a call. No one to return a call potentially for any feedback when they actually walk through your house, right? How maddening is it when you have somebody that requests, to see a house, they go through the house, you call to get feedback, you never hear from them. Again, it's just about being professional in your communication, being timely. It doesn't take days to get back to somebody. It doesn't take hours to get back to get somebody. You know everything about that house, right? You're professional in how you handle your communication. It is critical and it will resound with buyers and buyers agents. A detailed list of improvements and highlights. This is something that I think is really simple, right? It's you sitting down with your seller and having a very candid conversation and pulling out of them. When is the last time you updated the HVAC? Okay, it was 10 years ago. Are you getting it serviced every year? Great. Who's it with? You want all these details in a nice one-sheet printout of any upgrades that potentially happen, things that they maybe love about the house, and what they have continued to do to service that home through the years. It is something that's really easy. I think it's something that should be listed left at every house. So whether somebody is viewing your house or an open house and you have somebody else holding it, it is something for a potential buyer to snag, to grab, and it is something that they can walk away with and feel good that you are on top of, and your seller really cares about that house that they potentially want to buy. It's a must. And a few last things I put down is make proper recommendations. Do not ever hesitate, and this kind of went with the last one, to have those difficult conversations with our sellers, from landscaping to upgrades to potentially staging a house, to removing some of their stuff, decluttering. And the biggest thing for me, it's cleanliness. I can't tell you how many homes I walk into and the baseboards are disgusting. Or I go into a new construction home only to see dead bugs in the corner. It's It's maddening to me. And whether it's your listing or you're holding that open house, you need to have pride in that. If you're taking the time out of your day as a newer agent potentially to hold an open house on weekends, you need to get there early. You need to clean. I get that you're gonna tell me it's not your job, it's not your listing, but any potential buyer that's walking into that house that may not be working with an agent and you know everything about that house, you've cleaned that house, it's represented well, that is a reflection of you because you're the person that's there showing it. So take pride in that. So I just wanted to go over that as we're in this really difficult, market, and we're going to be coming onto the other side of the presidential election. I have a lot of agents feeling that things are going to pick up. I think a lot of that's going to be determined on interest rates, and I'll dive more into what my projections are on Monday of next week when we have the election the next day. I want to feel what goes on this week with the labor market and some inflationary data, and I'll have a better idea. But make no mistake about it, we need to be putting our best foot forwards. We need to be operating in the most professional manner that we can for not only our clients, but for ourselves. All right, y'all, as always, I'm around all the time. You need anything, I'm here to help. Text, email, phone call, just let me know you need a flyer, you need a conversation, whatever the case may be, I am here for you and your clients. All right, y'all, have a great week, and I will talk to you on Friday with the Friday wrap up. Cheers.